And stock market has remained bearish for about 6 consecutive trading sessions, even as investors adjust to the CBN's expanded access to OMO auctions. With fixed income yields offering stronger competition, earnings season on the way, and major market developments ahead, where does this leave equities and investors? Kehinde Jones, head of research, Anchoria Securities Ltd, joins me for more on this. Thank you for joining me today, Kehinde.
Morning, Perpetua. Thank you for having me on the show.
Yeah. Now, the stock market has stayed bearish for 6 consecutive trading sessions. Is it safe to say the NGX is already reeling from the impact of the CBN's expanded access to OMO auctions, or what other factors could be responsible for the sustained bearish momentum we're seeing?
I would say that is only OMO is the only reason why the market is bearish for about 6 consecutive bearish section. Just yesterday, the market lost about 544 billion of market capitalization. The OMO instrument is just adding pressure because the investors now see that they have access to short-term instrument yield that is giving around 20%. So what is going on in the market is we are also seeing profit taking in the market, valuation concern, earnings expectation from the tier 1 bank like Access, UBA, Zenith, GTCO, and also we are also seeing some rotation across sector. Don't forget that insurance sector capitalization also came in last month. So I won't even say that it's only OMO, but OMO is adding to it. But profit taking, some sell-off is also part of what is going on. But because now that investors have access to OMO instrument that is giving 20%, is quite a good momentum for investors to think about it. That why will I go for equity market? In order for me, it's better for me to go for OMO instrument. So the fact that the selling have been a major concern, particularly across banking, consumer sector, oil and gas, and also is showing that that OMO is coming to a place. 20% yield is quite good for any investor currently.
All right. So, do you think investors should panic, start portfolio rebalancing and capital reallocation, or what exactly would you advise investors to do at this point in time?
Well, in Anchoria Research, we don't think investors should panic. The current situation calls for what we call portfolio review rather than panic selling. The market are falling to a bit that the trading activity remain very, very strong. If you look at the trading activity, is very, very strong. There's still a banging hunting. A lot of investors are coming in, not also for every sector that is declining. Like insurance sector now is not declining. Yesterday, insurance sector slightly gained. So investors should review their holding, their portfolio, and ask financial institutions, ask security houses for good recommendation. Especially for fundamental and expected return to justify their current valuation. Where a stock is losing, when a stock is becoming too expensive, or its earnings outlook is very weak, what investors should do is to rebalance their portfolio in order for them to have a good return. So they should focus more on a quality stock that have solid fundamental than doing panic selling. So we are not seeing any panic selling. What investors should look out for is to do rebalancing. Like you said, rebalancing or panic. But I believe in Anchoria Research, we believe that rebalancing of portfolio review is better than what you should do panic selling currently.
All right, but really, let's. I don't know if you're the best person to ask this question, really, because this is where you play, and I can almost imagine what your answer will be. But let me ask you anyway: how attractive do you think the stock market is at this point, relative to what is obtainable in other asset classes like fixed income or the money market?
Well, this is a good question that you ask. If you compare equity market and fixed income market, equity market have delivered more than 50%, and Nigerian stock market is is the best stock market that have delivered a good return in the world as of June 2026. So the fixed income market have become more attractive, more competitive, with almost yield around 20%. and also NTB is currently doing around 16 to 17%. So investor can relatively say that the attractive return in OMO without taking the same level of risk associated with equity. So I can decide as an investor that, okay, let me go for OMO. So if you compare both of them, both market is attractive. However, it depends on the investor appetite. You know, some investors want return of 30%, 40%, 50%. You know, that's where equity market can give you. So equity market can still provide capital gain and dividend purposes. You know, they will have different investors with different motives. So which means that a strong company with good fundamentals, with good growth, can still outperform the fixed income market over time. So at this point, we will say that the equity market remain attractive, but investors need to be much more selective, looking for good, solid company than going for bargain hunting, than going for zombie stock, than going for stock that don't have good financials or a good cash flow. So
let me come in here, okay, quickly, in less than 30 seconds.
Yes, don't forget that the difference between NTB and OMO, and OMO is majorly used to manage liquidity in the financial services, while the NTB is majorly to finance government borrowing, government expenditure. So why will I want to go leave those instruments, now go for an instrument that it will give me up to 20%? However, equity market can have delivered more than 50% this year if you are tracking the all-share index.
All right.
Currently, the year-to-date is close to 45 currently. All
right, so quickly, let's talk about this. Now, Dangote has announced a $1 billion underwriting program ahead of its planned IPO. And we're also expecting FTSE Russell's decision on Nigeria's reclassification as a frontier market. How significant are these in terms of, you know, changing the sentiment in the market or even making the market more attractive?
Well, from what the NGX CEO said, you know, if Dangote IPO list at the market capitalization, equity market capitalization will push to about 230. Now, the Nigerian stock market also are pushing for NLPC to come and list. They are pushing for other companies to come and list in the market. Now, if Dangote IPO could bring new capital, what Dangote IPO is saying, the IPO will be majorly for retail investors. You know, don't forget the private placement that Dangote did, the 2.5 was oversubscribed, more than 400% oversubscribed. It was for HNIs, private investors, institutional, but IPO is majorly for retail investment. That's the market information that we have. So it will not take the market, taking the market capitalization higher, attracting global investor. And when it does, when it attracts global investor, what we'll be seeing that the FTE's roster decision is also important for us because it will change the Nigeria classification, and this will influence what we call the foreign investor participation and the index related inflow. So the market is sustainable for investors' confidence. There will be market sentiment, attractive valuation will come in, and this will also help the market continuity and growth in the coming 2027.
All right. Thank you so much, Kehinde Jones, Head of Research, Anchoria Securities Ltd, for joining us today and sharing your thoughts with us.